Hello and welcome to this week's episode for SPY Trader Now. I am your host. My name is Ken, and our model portfolio is up 10.13% year to date as of June 8th, 2024. Our stock market strength color signal is green, and this is our intra-month weekly video, so it is a shortened video compared to the end of the month video where it is a longer duration video. So right now we are trailing behind the buy and hold S&P 500 investor by about 2%. Last week the S&P 500 gained 1.25%, and we will go through the charts in great detail during this presentation. Last week we made no trades. Here are the trades that we've made in 2024. If you want to see all my trades going back for the last 3 years, you can head over to this link. It will be down in the description down below. If you have not done so already, go ahead and hit that like button, subscribe to my channel, and ring that bell. Here is our model portfolio compared to the S&P 500 buy and hold investor on a percentage basis so far year to date, so you can see how we've done. All right, now we are looking at the short-term 6-month daily candlestick chart here, and you can see that we're in this trading pattern right here. Here's where on this day right here when we broke out and started to make new highs, that was the day that I sold the long put and I bought the long call. I went upside down for a little while, but now I'm right side up on that long call and making some money. Now we're looking at a ratio chart, NASDAQ 100 to the S&P 500. And now we are in this upward trading, or this upward channel, I should say, right here. And we're kind of bouncing around, but it's up here at this level. Now we are looking at the VIX volatility index, the fear index. There are 3 levels on this chart right here. Below this green line is the ultra low range. Between these 2 green lines here is the low range, which is still bullish. And then above this line, which is above 20 on the VIX, that would be the upper range, which is bearish, and that is why it is in red. Where do we stand? We stand way down here in the ultra low range, and we stand at 12.22, very, very low reading, telling you that there is no fear in this market, that there are not signs that the market is going to have a massive correction within a short period of time, at least from what we're observing right now. MACD topped and is curling over and is ready to cross below its signal line heading down, which is further evidence that this is going to remain in this area for at least the next week or more. Slow stochastics also heading south towards the 20 line. Okay, now we are looking at SPY on a weekly 2-year chart, and we have weekly cycle brackets here at the bottom. Okay, now I want to bring out to you and call attention from this area to this area right here. So from this low to this low. And I want you to notice how we came up, made a peak right about here, and then came down and came into it that way. And what I'm trying to call out to you is how this is one cycle. And taking that into consideration, which is about 30 bars, then if we take that, and we can figure that out, if we click here on this portion of the chart right there, click on the line and click from here to that low, and it'll say 26 bars. So we know that that distance from here to here is 26 bars. So half of 26 bars is, let's just say, 12 bars. And if we take this low and go to where we're currently at, you'll see that we're 8 bars into our current trading. And we can go about 12 bars to be at the halfway point of the cycle. So if we can go 12 bars to be at the halfway point and go a little bit beyond that before we start hitting into a decline. So that is one of the reasons why we want to stay long in this trade right now. You can see the target zone is identified here in red. So right now we've got the 200 shares of SPY. We have one long call option. that is currently profitable. Oh, and another thing I want to point out to you, you'll notice that what we've done here is the old high, which is right there, and now we are making new highs. So this market is currently surpassing its old cycle low, and it's now making a new high. So if we can come into this area over here and we can capture as much profit as possible, then at that point in time, we're going to take our long call off the table and maybe not go short or sell an in the money covered call. Maybe we'll just ride the 200 shares for a little while and see how the market reacts. If it continues to go up, we'll sit tight. But if it starts to roll over softly, maybe we'll just do an in the money covered call, or maybe we'll just ride it out. I'm a little unclear how I want to play out getting money on the downside, this downside right here, because we have the summer doldrums coming up as well. So possibly this market will run flat to negative during the summer doldrums. So we might want to do an in the money covered call, and then when the SPY drops down in price, then we can buy it back at lower dollars. So that's kind of like the thought process that I have going on right now in my mind on how we want to handle our positions. So let's also look at the daily chart. So let's switch over to the 1 year daily, and we're going to change over to daily cycles. And now you can see that cycle that we were looking at on the weekly chart, but now we're looking at it on the daily, and you can kind of see how things are playing out. We have our target zone laid out right over here, and we've got the low of the cycle low here, and I've got that straight line which has not been violated. So we're kind of watching that. And we also have cycle peak here and cycle peak here, and drew that line across. So we want to see how this market breaks out of this triangle, either up or down. Hopefully we're going to break up and wind up in our target zone somewhere at mid to past half mid cycle, and then we're going to close out our call. All right, now here is a spreadsheet that I made up to determine the health of the market, and we want to compare our current reading to last week's reading. Last week, different asset classes were at 75 for a strength, and now they're at 69. So you can see that we've softened up on multiple different asset classes. I put greens when we have the number 5 and 6 being the maximum number you can attain here. And 5 is also a strong number. And then if it's not, then I give it no color. So the more green you have here, the stronger the market is. Also, we softened up in the 11 sectors of the S&P 500. Now we currently have 5 sectors that are not 5s and 6s. So kind of softening up. Last week we were at 64. This week we're at 60. Well, 62. If we drop down to 60, we're going to go from green to yellow. So next week will be a little bit of a telltale to see what direction this market's going to go in. Now I'm hoping and I'm thinking that the next week is going to be a stronger week for the market, not a softer week, but we're prepared to handle our trading in any direction this market takes us to. Here is a 1 year chart of the 10-year bonds, bond yields, and that is the candlestick portion of the chart. Now, the market over the past week dropped dramatically on the yields, where they dropped down over here into this, out of this trading range and below this trading range. Now, ironically, on Friday, look at this candle. That's Friday's trading, and it closed up at the top of the day. And it actually took us back into the bottom of this trading range. And slow stochastics and MACD are kind of coiled like a snake, and they have energy to pop this up higher. So it will be beneficial for us going long for the yields to stay down low, below 45, and not get back up to 46 plus. If they start getting back up past 45 to 46 and start coming up into this neighborhood, well, then we're going to be closing out our long call options sooner. because then the S&P 500 is definitely going to be in for the S&P 500 is in dark blue. That's definitely going to be in for a correction, but I don't think that's going to happen. But if it does, we'll be prepared for it, and this will be the telltale to because this is the 10-year bond yields. This is an extremely important market characteristic to determine what's going to happen to the S&P 500. Okay guys, so that's going to wrap the video. I just gave you guys a ton of information. Now, what do we do with that information? Well, June 8th, 2024, the market summation, according to me, Ken, your friendly host with SPY Trader Now. The market is now moving sideways with an upward bias. The VIX is telling me we are not in danger of a serious market decline, and it seems like we are going to climb the Wall Street wall of worry and grind slowly upward. We will hold our positions to see if our target of 556.61 can be reached before a market pullback. I told you guys what I plan on doing if indeed that happens. All right. If you have not done so already, smash that like button down, subscribe to my channel, ring that bell. I thank you and wish you good trading.